to identify goals and purposes. Okay, objective will help us to identify goals and purposes, whereas financial reporting, whereas fundamentals are underlying concepts that will help us to achieve those objectives. Those concepts provide guidance in selecting transactions, events, and circumstances to be accounted for, how they should be recognized and measured, and how they should be summarized and reported. It states the objectives of general purpose financial reporting and the information provided by it. Conceptual framework also guides on qualitative characteristics and the financial statements must possess. Conceptual framework often plays an important role in the development of institutional framework and assist preparers to develop consistent accounting policies when no accounting standards applies. So we have conceptual framework. Now what is conceptual framework? We have interrelated objectives. Now to achieve those objectives, we have to identify goals and purposes of financial reporting. What is the goal? What is the purpose of financial reporting? What are the fundamentals? What are the principles which we will have to follow to achieve those objectives? Then concepts provide guidance in selecting transactions. Now suppose I give services to my friend free of cost. That is not a transaction, that's an event. But suppose if I provide services to a student, that's a transaction. Selecting transactions, events, and circumstances to be accounted for, how they should be recognized and measured, and how they should be summarized. How to recognize, how to measure, which will be regarded as transaction, which event will be regarded as event. So all these things will be covered here in this statement. Conceptual framework often plays an important role in development of institutional framework and assist preparers to develop consistent accounting policies. Conceptual framework helps us to develop institutional framework. I want to debit my expenses. Debit means debit. So why I want to debit, I'll develop accounting policies related to it. So a conceptual framework helps me in that way. Then I have legal framework. Businesses are often controlled by various statutes under which they are formed. For example, in India, partnership organizations are governed by Indian Partnership Act 1932 or Limited Liability Partnership Act 2008. Cooperatives are controlled by Cooperative Societies Act 1912. Companies are governed by Companies Act 2013. In addition, banks are controlled by Banking Regulation Act 1949. Insurance companies are under Insurance Act 1938. So here in India we have multiple acts. And acts are, now suppose I am a partnership firm. I am governed by Indian Partnership Act. Suppose I am LLP. I am governed by Limited Liability Partnership Act. So we are required to follow some legal provisions given by these different acts. In addition, banks are controlled by Banking Regulation Act 1949. Insurance companies are governed by Insurance Companies Act 1938. Electricity companies are also governed by Central Electricity Act. All these statutes not only govern the administrative setup of these organizations but also provide important guidelines regarding use of resources, financing, and also on the maintenance of books of accounts and treatment of specified transactions. For example, Companies Act 2013 and Companies Rules 2014 provide useful provisions on maintenance of accounting records, accounting for issue and redemption of securities, investment to be made, investment to be done, consolidation. So legal framework means these are the companies, suppose banking company, insurance company, LLP, partnership, they have to obey whatever rules, regulations are given by respective act. Okay, they not only govern administrative setup of these organizations but also provide important guidelines regarding use of resources, financing, and also maintenance of books of accounts and treatment of specified transactions. For example, Companies Act 2013 and Companies Rules 2014. Act will always tell you you have to do. Suppose I'll tell you that you have to get up early in the morning to study, but how to get up, that rules will tell you. Rules 2014 provides useful provisions on maintenance of accounting records, accounting for issue and redemption of securities, investments to be made, consolidation, and even winding up of the company. Companies Rules 2014 provide the guidelines regarding accounting of CSR expenses as well as carry forward and set off of excess amount spent. Thus, legal framework plays an important role in accounting. The schedules of this act also provide important guidelines on the form and contents of financial statements. So we have legal framework. Now, what is legal framework? Legal framework is they are you know giving us policies, how to govern our accounting. Suppose if it is LLP, how to govern my LLP firm, that LLP Act will tell me, okay, what all provisions I need to go for, what should I do for maintenance of my accounts, or if I want to go for redemption of securities, what I should do. That Companies Act will tell me. So respective form, we have respective acts. Okay. Please give a quick read till here, then we'll go for institutional framework. I'll wait for 2-3 minutes, then we'll go for institutional framework. Institutional framework. Institutional framework refers to guidelines issued in the form of certain pronouncements by institutions entrusted by sovereign authorities to oversee the development of respective fields. In India, the Institute of Chartered Accountants of India has been entrusted to develop standards in the field of accounting. Now we have accounting standards, we have accounting policies. ICI on timely basis will issue different accounting standards, different accounting policies. Please obey this. For cost accountancy, we have Institute of Cost and Works Accountants of India, cost accounting policies, cost accounting standards, cost accounting rules. Same way for company secretarial standards. So we have institutes, and these institutes gives us rules, policies, standards. They keep on giving us, and we are required to obey them and accordingly go for our accounting. Same thing is mentioned here. Institutional framework refers to guidelines issued in the form of certain pronouncements by institutions entrusted by the sovereign authorities to oversee the development of respective field. In India, Institute of Chartered Accountants of India has been entrusted to develop standards in the field of accounting to ensure comparability and consistency in accounting information. Indian Accounting Standard Board of ICAI thus develops quality accounting standards on different areas of accounting. Currently, there are two sets of accounting standards in India: accounting standards as per Companies Act and accounting standards as per Companies Rules and Ind AS under Companies Rules 2015. In addition, Cost Accounting Standard Board of Institute of Cost Accounting Accountants of India has so far developed 24 cost accounting standards to facilitate cost accounting and reporting. So we have Institute of Cost and Works Accountants of India, Institute of Chartered Accountants of India. Reference they have taken here. Please give a quick read, then we'll go for regulatory framework. Then we have regulatory framework. Activities of organizations often come under regulatory ambit of various regulators. In India, there are different regulatory authorities in different segments of financial market, such as RBI in money market operations, SEBI in capital market operations, IRDAI in insurance sector, PFRDA in pension fund. In addition, there are Telecom Regulatory Authority of India, Competition Commission, etc. The regulations imposed by these authorities may also have important bearing on accounting of concerned entity. For example, regulations issued by SEBI largely shape the accounting and, more importantly, reporting by a listed firm in India. we have activities of organizations often come under regulatory ambit of various regulators. So in India also we have multiple regulators such as SEBI, insurance, for insurance sector we have IRDA, for pension fund we have PFRDA. So they have to work according to the regulators. On timely basis they'll have to report. Okay, we move from right to left, okay, we are reporting. We move from left to right, we are reporting. We moved upwards, we are reporting. So small steps also they are required to report. So that is regulatory framework to which all organizations and when that they have mentioned here. Then we'll go for next, accounting principles, concepts and conventions. Very interesting and important chapter. Responsibility of discipline of accounting is to provide financial information to the users of accounting information. For this purpose, it keeps records of various transactions in its books of accounts. The practice of record keeping may be practiced differently by different organizations. In order to ensure uniformity and consistency in record keeping, accounting profession has developed rules, conventions, standards and procedures which are generally accepted and universally practiced. So we have a responsibility of discipline of accounting is to provide financial information. Now, why we do accounting? We do accounting so as to provide financial information. Now, tomorrow morning what I'll do is I'll come to you and I'll ask you that please help me for decision. I want to take a decision. I want to invest 1 lakh rupees. 1 lakh rupees is the surplus amount. So what you will do, you will tell me, okay, let's invest in any company share. Well, let's purchase shares of any company. So for that, what we'll do, we'll download the financials and we'll start referring financials. Okay, we'll start comparing financials of 2-3 companies, and able to do this because all the companies, 3-4 companies, whichever we are taking under for comparison, all those companies' financials are prepared with the help of same base, same rules, regulations, concepts, conventions. So financial statements usually provide us financial information to the users of accounting information. For this purpose, it keeps records of the various transactions in its books of accounts. The practice of record keeping may be practiced differently by different organizations. In order to ensure uniformity and consistency in record keeping, the accounting profession has developed rules, conventions, standards and procedures. So I want to maintain uniformity and consistency. For maintaining uniformity and consistency, what I should do? I should go for common set of rules, common set of conventions, standards, procedures. Okay, and they are known as what? Generally accepted accounting principles. Generally accepted accounting principles indicate how to report economic events and are thus used by organizations in drafting their financial statements. So we have GAAP, generally accepted accounting principles. What is that? Generally accepted accounting principles? They are the common set of rules, conventions, standards, procedures. Okay. The generally accepted accounting principles indicate how to report economic events and are thus used by organizations in drafting their financial statements. So these principles, no, generally accepted accounting principles, they'll tell us that how you should go for reporting, what you are required to disclose, what you are not required to disclose, how financials should be drafted. Principles will help us with many things, but we are just supposed to follow. They are to be followed by organizations so that users of accounting information have an optimum level of consistency in financial statements they use when analyzing companies for investment purpose. Now, for example, I'll tell you, I am an employee and I want to join Reliance company. So what I'll do is I'll check financials of Reliance company. For past 2-3 years I'll check. Company will be able to give me my salary in time. I'll check many things, whether I have stability. Suppose I'm an investor, whether my money will multiply. Suppose I'm a customer, I'm a supplier, I want to supply goods to the Reliance company. In that case, I'll check whether company will be able to pay my amount. So users of financial statements are many. Our financial statements should be able to give them information, and for giving information we'll have to follow principles. Principles will help us to follow certain common rules, conventions, standards, procedures. It will help us to bring uniformity, consistency. Now, not Reliance, I want to go for other company, I can go for, yes, I can. Such accounting principles have been developed from research, accepted accounting practices and pronouncements of regulators. In India, financial statements are prepared on the basis of accounting standards issued by Institute of Chartered Accountants of India. Okay, a quick read till here, then we'll go for concepts of accounting principles, accounting concepts and accounting conventions. This chapter is very, very important for objectives. Now we have 30 to 70 marks pattern. So 30 marks is for objectives. Very, very important. 1 or 2 marks also. Questions relating to 1 mark, 2 marks, 3 marks can also come. So for such type of questions also, this chapter is very, very important. Please give a read, then we'll go for definitions and meaning. Accounting principles are the basic rules which act as primary standard for recording business transactions and maintaining books of accounts. They provide standards for scientific accounting practices and procedures. So what are accounting principles? Accounting principles are basic rules which act as primary standard. Accounting principles are basic rules. Debit credit are the basic rules. Personal rule, nominal rule, they are the basic rules. They are used for recording business transactions and maintaining books of accounts. They provide standards for scientific accounting practices and procedures. They guide as to how the transactions are to be recorded and reported. They provide standards. They provide standards for scientific accounting practices and procedures. They guide as to how the transactions are to be recorded and reported. They assure uniformity and understandability. They guide as to how the transactions are to be recorded. Record this way, not that way, record this way. How to be reported, report this way. Monthly, quarterly, period, they'll specify everything. Reporting, recording. They assure uniformity. Uniformity is there. So then only we'll able to compare. Reliance Jio accounts and Vodafone accounts, Airtel accounts should match with each other. They are the different firms in telecommunication industry. Then only I'll be able to invest in telecommunication industry. In any form, your firm is known as Reliance, Airtel, small, the companies under telecommunication industry. Same way infrastructure is industry. Any companies under it dealing with infrastructure, any, suppose steel, rod, cement, so they will be known as firms. So I want to assure that there is uniformity, understandability. Accounting principles are accepted as such if they happen to be objective, usable in practical situations, reliable, feasible, comprehensible to those with a basic knowledge of accounting and finance. Accounting principles can be split into accounting concepts and accounting conventions. So you can split your accounting principles into two: concepts and conventions. Accounting concepts refer to assumptions and conditions that define the parameters and constraints within which the accounting operates. They lay down the foundation for accounting principles and ensure a recording of financial facts as sound basis and logical considerations. We have accounting concepts. Accounting concepts refers to assumptions and conditions that define parameters and constraints within which accounting operates. Accounting concepts refers to assumptions and conditions that define the parameters and constraints within which accounting is required to be operate. They lay down the foundation for accounting principles, ensure recording of financial facts on sound basis and logical considerations. The common accounting concepts are entity concept, going concern concept, periodicity concept, money measurement concept. So our principles are divided into two, that is accounting concepts and accounting conventions. Now concepts they have defined, they have given us a few concepts, somewhere around 6, 7, 8, 9 concepts. We are supposed to answer them all one concept. Now they can give you question, define entity concept, define going concern concept, dash whatever is the content of entity concept. Okay, so this is concept. Concept is refers to assumptions and conditions that defines parameters and constraints. Accounting concept refers to assumptions and conditions that defines parameters and constraints within which accounting operates. They lay down foundation for accounting principles and ensure recording of financial facts on sound basis. Whereas accounting conventions are customs. हम ऐसे ही करते हैं, रिवाज, customs, tradition. Accounting conventions are customs, methods, procedures or guidelines associated with practical applications. Formats for accounting we prepare well in advance and keep, that is tradition of my company, custom of my company. Accounting conventions are customs, methods, procedures or guidelines associated with practical application of accounting principles. These are widely accepted and are the common practices which are used as a guideline when recording transactions. Before auditor comes, we keep everything ready. He comes, he sits for 2 hours and goes away. Everything we keep ready by 31st March or by 30th April. Every year auditor visits on 3rd May. That's customs, methods or procedures or guidelines associated with practical application of accounting principles, that is accounting convention. They are widely accepted and commonly practiced. I will do and you will not do. No, it is not like that. Commonly practiced, which are used as a guidelines when recording transactions. Debit and credit. Accounting conventions are necessary part of accounting profession since they result in transactions being recorded in the same way by multiple organizations. These allows for reliable comparisons of financial facts and figures. However, accounting conventions may change over a period of time, thus reflecting shifts in general operations or practice of dealing with transaction. Different accounting conventions are convention of conservatism, convention of consistency, convention of materiality, convention of full disclosure. So we have accounting concepts. Okay, and for accounting concepts, accounting conventions, they have given us 4 types of conventions. I'll wind up this video lecture here. In our next video lecture, I'll start from accounting concepts and I'll target to cover accounting concepts and conventions. Thank you.